All right, good morning. So a little bit of volatility in the market with Trump tweeting that we'd reinstate tariffs on Friday. So for those of you who are newer joining us, when the market becomes more volatile, we say the market itself is in play, and we shift our focus from trying to find the individual stocks with the strongest catalysts to actually trading the market itself. And so that's why in the morning sheet, I put on the SPYs and the VXX. I also did put on a couple of names that in no way should be related to what's going on with China, some biotechs, and that have fresh news catalysts. But overall, the market and large cap stocks are going to be impacted by what the SPY does after the open. With this large of a gap, there's going to be a time period where they need to kind of figure out where to price the individual components.
We're looking for.
The ones that are more tech related, semiconductor related, obviously those are going to be down a greater percent. That's why you'll see the Qs down a higher percentage. They may be less likely to have larger bounces. The things that are less impacted could see strong bids, and then the kind of the SPYs will balance themselves out at a price kind of based on where those components land in the first 15 or 20 minutes or so. Having said that, 289 is a really good level in the SPYs. We failed there a few times in early to first and second week in April. When we got above, we held it for a week, and that became the 289 to 291 became a consolidation before we had this nice up leg to 293. So for me, when the market is gapping lower, $5 down, 50 handles on the futures, $6 off the high, that's a spot where I would just think naturally people would be looking to buy. We have flushed a little bit below that level overnight, maybe 30, 40, 50 cents, something like that. But I think the risk reward in the 289 area is pretty good because you could just get a reaction pop right back up to 291. And that's pretty good risk reward. A failure in this area up here in 291, which had been where we failed back on April 17th, then supported a little bit here. Overshot a little bit on the Fed day. That's a good risk reward on the short side until we have more clarity on whether or not the trade talks are going to move forward. So it's probably better than 50-50 that things will move forward and things will work themselves out. There's high stakes and both sides have quite a bit to lose. So there's probably some gamesmanship going on. Obviously, if things don't work out from a trading perspective, that'll be better for us. But in the meantime, we could have a couple of days until there's more clarity of some volatility. So that's kind of where we are. Let's zoom in on the SPYs. Let's see, like when London opened this morning, we were actually in the 289 area. We worked our way up. Because of these late prints on eSignal, the charts are fucked up. So thanks eSignal on that. Basically, you can kind of see the bounce to 290, and we're kind of just not really doing much, really. I think people are waiting to see when the market opens. Is the first move going to be up or down? If the first move is up, as I said, 291 would be the first spot to look to see if there's some selling. Again, we're down 430 right now. So even a quick pop up to 291, if there's not much of a pullback from there, could move up some more. Remember, let's say just 291, even 292, we're still down. We'd still be down $2. So there's some room there to overshoot on the upside. On the downside, 289, we're down 5 and change. Could go a little bit lower than that. We've obviously seen the market down. The SPY's down $5.50, $6 probably a couple times, maybe in the last 8 months. Without going back and looking at the particular days. So there's room on both sides, but 289 is going to be potentially key if we drop out there quickly on the open. On VXX, we've already come off a bit from the pre-market highs. We were up at 28.5. I hadn't even been looking at VXX last week, really. And it did have a pretty good pop on Wednesday from 25.30 right at the end of the day to that 26.80. So that was on the quick sell-off on the Fed right in the last 10 minutes. The next morning, it did actually pop up almost, got up to 27.70. So I would think that people would be looking to buy this definitely into 27, but even above 27. What did I put on the sheet? I put 27 as our first support on the sheet, but I'd even look at it in the 2730s, kind of right here. If we go back here, I'll just show you a little bit when the VIX has been beaten down and it pops back up and actually has a real move. Let's see. So it's been trending down for a while. So here's a good example. So back in October, you can see the first pop here. Obviously, this was a huge pop, but you got the nice pullback from 37 all the way down to 32. And then you got the next leg up. And that's really the most common thing we've seen. The last couple of pops has actually been just pops sold lower, lower highs, trending. The question is this kind of going to break the pattern now? Pull back on the open, and then maybe get another leg. And this can happen even with the market kind of stabilizing, where people are just betting that there's going to be a larger range. Remember what the VIX is the measure of. It's the next 30 days, what this range in the SPY is going to be, the S&P. And so if people think now we're going to be a little bit more volatile, we can put in a higher low, can actually kind of try to break out of this downtrend here. Something like that. Pull back and do that over the next day or so. So that's on the VX. And this is going to be really liquid. So that's another good thing about it. It trades 30 million shares, so you can pretty much trade whatever size you want. You're never risking more than 10, 20 cents. You're just playing for a scalp. All right, so the two non-market, actually, let me just take a quick look at the Qs for you, because that's going to be a little bit more volatile with all the tech names. It's interesting. It's already actually, this is interesting. So this is already bounced above the low from the other day. $188 to $188.20. So this was kind of from this Fed sell-off day, $188.20 after hours. The next day, 187, bounce back up to 188.20. So this is the first resistance in it, and 189. And next support's around 186 and a quarter. See something. Amazon, 2%, 1.7%. Google. Why is it not down that much? It's only down 1.9%. Interesting. All right, so it's actually down a little bit less than I would have expected. Yeah, I mean, Apple's caught up in the thick of it. So in Apple, I'm not long Apple. We hedged off a little bit on Thursday on the puts. I think I told you that on Thursday, but we were playing it for a move down to 205, which it already obviously did. If things don't work out with China, it's probably going to trade down to 200. If things work out with China, it'll probably do a retest of like 209, 210, something like that. We'll see if this is the actual medium-term top in it. It's going to react strongly to the China. I mean, that's why it has such a large gap. It was already up a ton on earnings. China's direct impact. Obviously, China was the big reason it sold off originally. All right, so let me show you the two non-China related names, AX, SM. So this is one, you know, when you look at it originally, they have news on both the depression drug and the migraine drug, and you think this could be a real strong stock today, but then you kind of look at what the moves that it's made already recently. You had the move from $8 to 17, sold off really hard from there to 13, took out the high recently. So clearly we were looking at it there, it was still marked up. And then when it took out that high, what did it do? They bought it there for a few days, and these people were right. Good news happened. It has a history, a little bit of a history on these pop-ups of having pretty good pullbacks, and it's already pulled back from 22 to below 20. So if we just draw kind of an uptrend here, normally does 1 million shares. I think we're probably looking at we're looking at least 2.5 million shares today. So in the 2.5 to 5 range, let's call it. In the pre-market, it's done 140. Yeah, I mean, I'm definitely a buyer in a flush into this area, even 19 maybe. And then in this situation, I would look to see if it puts in a lower high, 21. So my starting thought, what I put on the sheet, I put 18 for support, but even at 19, right on the open, I want to see if there's buyers there. And if it pops from 19 to 20 and fails, then I know it's probably going to be a sell the news situation and go all the way down to our support. Yeah. Newell had a catalyst on Friday. It's actually trying to put in a longer term bottom. Could be an easier stock for some people to trade, less experience. People were looking for a bottom in the 20s, like 25, then it went to 15. It looks like the bottom could be in on this one, similar to triple BY. So this is where, I mean, clearly you can see it on the chart. This is where people were looking for the bottom here. It broke through there, maintained the downtrend. It's still way off of the downtrend line. And you could be looking at a 1920 situation, right? So this is definitely worth looking at, bigger picture. BYND, I think people who missed buying it on the IPO day, people are definitely going to be looking to buy that. The obvious thing would be 60. It wouldn't surprise me if people were bidding in front, even before it got to 60, like 62. It already was there in the pre-market pretty much, I guess. So there's a huge supply demand imbalance. There's not a lot of shares with this one. People are going to want to buy this on the pullback. I'm sure most people are thinking it'll come back and retest somewhere in at least the low 70s, if not higher. So WW, I'll talk about Disney. So I don't really care about the weekend ticket sales, but the stock has now come off $10 from the high. They report tomorrow. I don't have it on my sheet yet. I mean, on my platform, so I'm not sure if it's tomorrow. It's tomorrow. It's after the close. I mean, that was kind of my thought. 131, 132, and it almost got there on Thursday, so that's why we bought on that pullback there. It's coming in there. So, I mean, I guess it's possible it could come all the way into 130, but I'm sure there would be some people looking to buy it in the mid 131s, let's say, when the market opens. We may even just push it right back up to 134, 135. This might become resistance now, this area here. But right now you have this downtrend off of the top. Since it had this hard down move the next day, it came back up, tested the low here, failed, and then has been trending lower. So to break this pattern, basically, it's got to, I would say, have some closes above 133, and then maybe break to the upside. That is it. So, look, guys, the market's going to be more volatile today. For those of you who are newer, not used to this, when the market gap's down 50 handles, you could have, $1.50 up moves, $1.50 down moves. The key is once it establishes a morning low or high, watching how it behaves off of those levels. Does it consolidate tight against them and break one way or the other? And you can play those moves for like 70 cent to dollar moves. And that's pretty much what you're going to see people doing for most of the day. And hopefully we'll have this elevated volatility for at least 2 or 3 days. If there's no China trade deal, this could be fun for a while. As always, be patient and good luck.